I think $100 is a very realistic target for silver in 2026. It could end up being, but I don't want to forecast that, but I'm comfortable with a forecast of 100. We'll at least go to 5,000. Right now it's, 4,300. So 5,000 at a minimum. But I think if silver's at 100, gold could easily be at 6,000. So you're going to start to see some big impacts on inflation, certainly by the second half of 2026, probably the first half from, what's already been done. The only bright spot, I guess, in the inflation landscape is oil prices, and oil prices are low. I'm not disputing it, although they're not as low. Trump said $1.99 a gallon. I mean, I don't know anyone buying it at $1.99. I'm looking at a barrel of oil now. It's $56 a barrel. That's cheap. It's never been that cheap outside of a couple of weeks during COVID.
Peter Schiff has issued a renewed warning to investors, arguing that precious metals are poised for a major breakout as inflation pressures rebuild. Schiff says a $100 silver price in 2026 is a very realistic target, noting that while prices could potentially move higher, even toward $200, he prefers to stay conservative. He adds that gold should reach at least $5,000, up from the current range near $4,300. According to Schiff, if silver hits $100, gold could easily trade closer to $6,000. He attributes much of the coming inflation surge to Federal Reserve policy. While inflation cooled temporarily when the Fed raised rates and pursued quantitative tightening, Schiff argues that credit expansion continued underneath the surface. Now, with rate cuts and renewed quantitative easing, he believes the monetary spigots are wide open again. Schiff expects inflationary impacts to become more visible by late 2026, possibly sooner. One exception, he notes, is low oil prices, currently near $56 per barrel. Compared to gold, oil is historically cheap, reinforcing Schiff's bullish outlook on precious metals as inflation accelerates again. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
You're going to start to see some big impacts on inflation, certainly by the second half of 2026 from what the Fed is doing now, probably the first half from, what's already been done. The only bright spot, I guess, in the inflation landscape is oil prices, and oil prices are low. I'm not disputing it, although they're not as low. Trump said $1.99 a gallon. I mean, I don't know anyone buying it at $1.99. But yeah, I mean, I'm looking at a barrel of oil now. It's $56 a barrel. That's cheap. And in fact, when you compare it to $4,300 gold, it's never been that cheap outside of a couple of weeks during COVID. So you're talking about really, really cheap oil. But that's just one price, right? There are plenty of other prices that have gone way up. And so on average, prices are going up. And in fact, not only did Donald Trump say that prices were going down, he said they were going substantially down. I mean, what's substantially? Because even if prices were going down 1 or 2%, I mean, that's not substantial. So what is he talking about? Is he claiming that prices are dropping 10% or something like that when Trump was elected? So there's not just that's just rhetoric. I mean, Trump wants to claim credit for oil prices coming down. So he has to say it's because of my great energy policy. But the policy has not had much impact. Now, is it possible that it's had some impact? Sure. I don't know. Where would oil prices be if Biden were still president? Maybe they would be higher, but they're very cheap right now. But I don't think they're going to stay cheap. So we'll see. By next year, oil prices could be double. They could be back up at $100 a barrel. The most obvious thing is, well, we need to expand our reserves, right? We need, we're making so much money mining gold. We got to get some more gold that we can mine. Right, because our costs are $1,500 an ounce, and we're selling it for $4,500 an ounce. They're making $3,000 an ounce. I mean, like this printed money. But they may find that the cheapest way to expand their reserves is not to go drilling, but to go buying on the stock market. And look at these smaller companies that have already done the exploration, have already proved out the reserves, and just don't even have the capital to develop what they own. And, they'll just go and they'll buy them up. And, the whole industry has had a hard time even raising money. And the conditions, the banks will force them to hedge. Oh, we'll loan you money, but you need to hedge your gold or your silver. We don't want to take any risk that the prices go down. These guys don't have a clue. These bankers don't realize that gold and silver prices ain't going down, right? That they're going to go up. But the companies can't get the loans unless they agree to do a hedge. But, when a big company like this, they'll just buy up these companies. They got all the cash flow they need. They don't need any financing. They can finance whatever they need because they're going to be swimming in money based on prices. And you say, yeah, the easy money has been made in that the stocks have had a big move. But it wasn't so easy in a sense that you had to have the conviction. You had to be right. You had to have the foresight to know that the price of gold was going to go up. So in that respect, that easy money has been made if you were smart enough to know that this was going to happen. But from another perspective, I think it's even easier to make money now because you don't have to go out on a limb and project that gold prices are going to move up. They've already moved up. So the next move is even easier, I think, on a typical investor because it's not as risky a trade, because it's obvious that even if the gold price just stays where it is, these stocks have to go up a lot to catch up to where the price already is. So that might be an even easier trade to make, to buy cheap gold stocks when gold is at 4,000 than when it was at 1,500. Because when it was at 1,500, people thought it was going to go to 1,000. Now that it's at 4,300, even if gold drops to 3,000, which is extremely unlikely, but even if it does, the gold stocks are still cheap. Where they're trading now, even if gold goes way down. Inflation is going up. Pretty much got no way to go but up. The budget deficits are big and getting bigger. The Fed is cutting rates and doing quantitative easing. So that's a toxic combination. That's how we got into this mess. So inflation is going to rear its head in a big way. I think that by the final year of the Trump term, inflation will probably be higher than it was in the first year of the Biden term. Biden set the high mark now at 9.1, but almost all that inflation was the result of policies that happened under the Trump administration, not under the Biden. Biden, is responsible for inflation in 2022 or 2023, 2024, and some of the inflation we've had under Trump. But now pretty much a lot of Trump's policies are starting to kick in. And the Fed, of course, the Fed is the primary bad actor in all of this. And, the reason that inflation started to come down under Biden was the Fed was hiking rates and, it was doing quantitative tightening. So money supply shrunk somewhat, but credit kept expanding. That was a big problem. But they were pushing back a little bit. But now they've got the monetary spigots open again. We're doing rate cuts. We're doing QE. So you're going to start to see some big impacts on inflation, certainly by the second half of 2026 from what the Fed is doing now, probably the first half from, what's already been done. The only bright spot, I guess, in the inflation landscape is oil prices. And oil prices are low. I'm not disputing it, although they're not as low. Trump said $1.99 a gallon. I don't know anyone buying it at $1.99. But yeah, I'm looking at a barrel of oil now. It's $56 a barrel. That's cheap. And in fact, when you compare it to $4,300 gold, it's never been that cheap outside of a couple of weeks during COVID. So you're talking about really, really cheap oil. But that's just one price, right? There are plenty of other prices that have gone way up. And so on average, prices are going up. And in fact, not only did Donald Trump say that prices were going down, he said they were going substantially down. What's substantially? Because even if prices were going down 1 or 2%, that's not substantial. So what is he talking about? Is he claiming that prices are dropping 10% or something like that? Because they're not only are they not dropping, they're going up. But Trump is lying. That's it's ironic that he's lying on Truth Social of all places, and he got mad at me for telling the truth. I told the truth on Fox and Friends, and then he had to lie about it on Truth Social by claiming that I'm a Trump hater when, it's got nothing to do with how I feel about Trump. You don't have to hate Trump or like Trump, to know reality. The reality is prices are going up, whether I like Trump or not. That's reality. Trump's living in denial if he wants to claim that they're not.
Peter Schiff warns that inflation pressures are quietly rebuilding and will become far more visible over the next year, driven largely by Federal Reserve policy rather than political leadership. He argues that while oil prices near $56 a barrel appear to be the lone bright spot, they are historically cheap compared to gold around $4,300 and unlikely to stay low for long. Schiff dismisses claims that prices are substantially falling, noting that most costs continue to rise and average prices are clearly moving higher. According to him, Expanding budget deficits combined with Fed rate cuts and renewed quantitative easing create a toxic mix that leaves inflation with nowhere to go but up. Schiff expects the impact of today's easy money policies to hit by the first half of 2026. He also believes inflation by the final year of the Trump term could exceed the peak seen early in the Biden presidency, regardless of political rhetoric. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos.